So hi guys, so welcome back, welcome to the new subscribers. I've been busy, busy with backtesting and everything, but I do want to explain a little bit more about the Quant app and 40x leverage trading. I made a little risk guide because I also got the question what my max drawdown is. Currently it's at 50, which is way too much over what it should be. And yeah, that's why a little bit had a research about it, and I wanted to share you the thoughts about this also. So, understanding two types of drawdown. Per trade risk, most critical. This is what prevents liquidation on a single trade. Definition: how much one trade can damage your account. Position size percentage times the stop loss percentage times the leverage is account impact in percentage. Example: so 1% a half of liquidity, stop loss 35, 0.35 price move, leverage 40, so 0.21 would be a very safe in this case. Safety thresholds per trade, lower than 1%, ultra safe, many trades possible. Between 1% and 2% account risk, safe, good for scalping. So that's what I'm using a little bit right now. I'm scalping, but um, trying to really. It's the first time I really try to scalp my way around the bush sometimes. Here I would try, but I saw the continuance, so I kept going. I made a nice little profit in the end, but I thought it would go farther than this one. But not a financial advisor, so I can be wrong as you guys. So between the 2 and 3% acceptable, use graduated protection. So someone told me 3%, so this is still acceptable, but 2% would be more safe. Uh, Larger than 3%, dangerous. One bad streak equals big trouble. I've been there, guys, on the emotional ride, and it cost me almost half my wallet. So two, overall backtest drawdown. So this is secondary. Uh, Worst liquidity decline from peak across entire backtest. Multiple small losses accumulating over time. 10%, 20% overall drawdown is acceptable if strategy is net profitable, per trade risk is controlled, and drawdown recovers within reasonable time. Sorry. So as you can see, guys, here the max drawdown in a backtest should be between this 10 and 20%, even lower if possible. I have a few backtests that even say 0, but that could be a sign of overfitting. So I really use the premium package on those guys, and I see if they got filtered out or not. But everything is still running for the Quant app because I'm backtesting over 160 strategies on 15 different time frames, from 1 minute till 1 month. So it's a real ride for my PC right now. So yeah, it's acceptable if you have these three in sight. Strategy is not profitable, per trade risk is controlled, drawdown recovers within a reasonable time. Keep that in mind, guys. Safety thresholds, so below 5%, excellent, very stable. 5 till 10, good, manageable with graduated protection. 10, 20 acceptable if profitable and recovers. That's why you can do a Monte Carlo or walk forward on this one. Permutations, you can also do this. You have some analysis that you can perform between 30 and 20 and 30. Risky, needs strong edge and discipline. So that's what I'm doing right now, guys. I have a risk of 50, so I should have been putting this on 30 to secure my profits a little bit more. Um, but I am just learning about these guys because I never paid attention to this before. I always let my bot run. It's much easier than emotional trading. But as you can see, I make less trades a day right now. So I'm really getting the hang of my indicator. I'm really getting the hang of how it works, how to see what is going to happen. I'm not going to say I'm predicting what is going to happen. I'm just trying to see what you would be seeing when you look at a screen. Just trying to visualize it. Oh, it might go that way, it might go that way, and then you make your choice. Over 30% too volatile, even with protection. And guys, before I even started with backtesting, my first backtests were whoa, major drawdowns of 100, even more. So if your first backtest backfires on you, please, or you use the same backtest, but you add indicators or you add more security rules, adapt some params, ranges, use ranges so you can test more. Because your backtest, even though it's stinking at the time, it could be a better backtest if you implement some more things, or you just rip it up and start over with another strategy that caught your mind or your eye, and continue with that one. And don't forget, guys, if you want a backtesting system, it's available at my Nexus BT system 2026 GitHub. It's freeware. It's kind of plug and play, but you do have to set it up for the exchange you want, because it tests 10 different exchanges and 1700 plus symbols. So if you run them all with 160 symbols, sorry, 1700 symbols on all the different exchanges, on all the different strategies I have, uh, I can tell you guys, Hyperliquid with no, sorry, 5 exchanges before with I think it was 10 strategies. Took me a day to run with the CPU acceleration and the GPU acceleration that is available. Um, so you can only guess what 164 or 68 strategies will do now to my backtesting system. It will take a while. Here at the bottom is the ML learning PT kind of. He's searching, he's learning. He's not actually backtesting, but he's testing out some params to see which are the best to set for the ML environment around this handy indicator, so it can be used more correct. So if you can see the TP here, okay, he's saying 57%. Let's see what that will say here. Always have to keep an eye on everything a little bit. So, but we still have a lot of long licks on the other side, but we still have few major blocks. This is one, this is one, These are all the smaller ones. These calculate for six different data from six different exchanges, included the data from the hyperliquid node from the quant app. So yes guys, let's see where that goes. For the moment, not so good, because I told you I see a lot of these guys riding up, and that's gonna drive the price down. But as you can see, these are not only the ones you see here, because else this one would be like this one, 14 million, but it's only 1.4. So this is what I'm trying to tell you. This is more than one exchange. So I have more accuracy on my system and make better choices. So that's why we are now also calculating the risk a little bit, um, trying to find that sweet spot for the strategies that I'm going to use, because I will not use only one strategy. I will use a few. I will even see. I found four that could coincide with each other. They will never trade on the same time, because the trades that were backtested were not on the same period, the same time frame, the same data set, but I mean the trades were on a different period done, and all this was also researched with another backtest to see if they coincide or not. So graduated drawdown protection. When account drawdown not per trade reaches threshold 3, close 25%. If it reaches 3.5, close 50%. If it reaches 4%, close 75%. If it close 5%. So this could be a nice enhancement for the quant app. So people could say, I'm actually going to copy and paste it very quickly. Sorry guys, if I get an idea I just have to share it. So just gonna upload that file. What was it? The quant. Okay, the quant app. There's so many things on this PC right now, so much going on also, and that's sent. That's I know the author of this app, and it's very easy to keep a little bit of um, yeah, how can I say, communication on maybe things that could be improving on the app, because in the app we can see indeed I can close off positions, but it would be nice if you could really kind of set risk for different levels. Could be nice, so it automates a little bit more. So like now it would say, oh, close 25%. If it goes further, oh, close another 50. Goes another, then you can close 57 again. But it's a risk as well, because this could still be reverting upwards, because you see there are still a lot of short licks. Um, oh, they've been eaten up, some of them, but they're really cutting into the shorts right now. So that's why the indicator is pretty accurate. Okay, I made a thinking mistake of scalping that way to make a little profit, but it backfired. It seems it's not done yet, but that's why we need to do this, guys, to protect against cumulative losses from multiple trades, not individual trade losses. So the strategy design, position sizing formula. This is pretty basic. So max account risk divided would be easier if it's just like that. Divided by the stop loss times the leverage times 100. Example targeting 0.25% account risk per trade, max account risk 0.25, stop loss 0.35 price move, 30x leverage, so that it will be a liquidity of 1.79. Use there for 1.5 liquidity per trade. So it's kind of simple position size calculation, but that's the point of what I'm trying to do with the dashboard, guys. I'm trying to build something that will make this decision for me, that tells me how much I can put into the trade, instead of just guessing, oh, I will put 2%, oh, I will put 5%. If the strategy behind it says it's, and the ML learning behind it says that it is a good trade, and um, you have to go good on it, then he will tell you to put even 10%. But I will keep it low key for now because I'm still testing it out. It's only been a week since the release of the first one, and we're already at release 8. The Rust and everything, the C# implementations will come once I will start my graduate studies. But I need some breathing time right now, guys. I need to zen zone myself to get started on the studies. So scalp parameters, it's one of the strategy I've been testing out on the 15-minute time frame. Stop loss 0.25, 0.4, price move tight, target 0.3, 0.6. Yeah, you have to do it times 40 to, or times the leverage you use, to really know the price move uh, in percentages that you see on the exchange. Hold time 45 to 90, so 3 to 6 bars max. Position size 1 of 2 of the liquidity. So see, always start with small, and even with scalping, guys, don't get too overconfident, because your account is at risk. So this is 0.15 or 0.3 per trade, the account risk. Frequency, many trades, 50 to hundreds a week and not a day. Like I read today, it's a little bit crazy. I know I'm not the one to speak, guys, because this was a hell of an emotional ride. Let me verify it like this. Hell of an emotional ride. And if you see, redefined my own discipline. I found my Zen zone. I said I will not perform like that anymore. I will follow my own strategy again, and I will use my indicators that I made. That's basically why I made them, to make better decisions, to show you guys that it can go another way. But you really have to put your back into it and think of things like I did, because I'm working on another indicator for myself, private indicator with even more ML learning. but that will be for one of my new bots. I will integrate a bot that only works on ML, and I will maybe make an AI driven one, but first I need to feed up on some more research about that. So example scenarios. Scenario A, single bet trade, entry of $100,000, position 1.5 equals 1,500, stop 0.35 move, leverage 40, so the loss 1,500 times 0.35 times 40 equals 210, so 1.21 from your account, no balance, so no liquidation. B, multiple small losses. Start 100,000 minus 21 minus 20 021 021, so it goes down every time. So overall drawdown in 5 trades 1.05 is manageable, still far from liquidation, needs 60% loss for liquidations at 40x, and that is actually 50% I think, but I'm not gonna argue at this point with AI because I think he's better at math than me. Scenario C, extend losing streak 10 losses after 10 consecutive losses at 0.21 each. The account drawdown will be 2.1. Graduated protection not yet triggered. Triggers at 3%. Still safe from liquidation. Can recover with 3 good or 4 good wins. But the quant app will, I think, not allow you to trade anymore when you reach your drawdown, and it's also protecting you when you are trading. It would close up uh, certain amounts of your profits while you're trading. If I would put this on 3% right now, I think you would maybe close up half of it, but I'm still a believer that I can win this trade, but I would have to go up till here, I think. 71,478, a little bit higher, 478. It's way up there, or a little bit higher than this red candle where I added the last one. So okay, let's move on. So the key insights: tight stops are your friend. Price move, keep per trade risk minimal. High frequency wins, 100 trades at 0.2 each equals 20% gain, even with 40% win rate. Drawdown is inevitable, 10 to 50% overall drawdown is normal for active scalping. So actually he's telling me to make the choice here. Position sizing matters more than win rate. Proper sizing prevents liquidations. Recovery is possible. Small per trade risk mean you can recover from drawdowns. So this is my checklist, but I still need to update it. Premium scalper strategy. These are some things I performed on the strategy. Low risk scalping with premium analysis tools. So yeah, guys, this was for today. Hope the trade will survive. Um, if you want to set your risk drawdown, so he has been. I can't do it right now because I am in a trade. So you have to set this before you start trading. Your margin too, I think. Margin is a little bit high. Also, I should set this proper at max 30, I think. But I still really need to investigate this. This will be another video, maybe. to set our proper margins. And now you know a little bit more about the drawdown, on how you have to look at it, how you need to use it, what kind of strategy are you in? Are you in high volatility like scalping? Are you just wanting momentum strategies, or do you want big profits, want small profits? Because you see, with a scalp, if you have 10 0.2 percentage profits, you have 20% profit. You could take it in one, because scalping, guys, it includes fees, until unless you are fast enough. If you go on off, the fee is very low. If you place orders with the 50-minute tick, not the one, because that's like market order, and market orders is not what you need, guys. You pay lots of fees for market orders. So yeah, uh, that's about it. Now I'm just waiting to reset this. I think I will put it at 20, a little bit more than he is actually saying here. So, because I'm not only active scalping, so let's review that other thingy again. 20, 30 each edge. I am searching for discipline, so, and a strong edge, because I'm not only doing it for scalping, I'm doing it for more strategies. So between 20 and 30 would be more for me, rather than the 10-20, or I should take the 20 in between the two. That's something I can think about while I'm sleeping, because now I am going to say goodbye to you guys. I hope you enjoy the movie about the 40x leverage risk guide. See you next time. Bye.